Good morning. 128, 2016. We have an opening bell gap. Now on the daily charts, Netflix has sell signals. And it's not like when you're shorting a gap, you want those daily sell signals and those trends to be down. It's not like that bull is ripping and roaring like it was. And once again, there's the sell gap on the opening bell. We've been open now for almost 30 minutes. And this is how bottoms get put in. And what we're looking at doing is taking a look over here at our ratio, which right now is 0.8. Oh, there it goes. Minus here. Oh, yes. Come on. That short's paying. The put options are paying. The put options are paying. Because what happened was is on that gap, for you new option traders over here, is that gap is when the puts were at the bottom of the opening bell. So how do I learn how to buy puts and calls relative to a gap open, trading what? Trading the put side of the market. Why? When that gap, the opening bell puts at the strike price were at their morning low, and now they're paying money, and it's 45 cents per 16th in our market maker application. And another thing that we're going to tell you is that's how it works when you have daily sell signals. And we continue to go lower right here. Check it out. And this is the opening bell. Learn how to sell short gaps. Learn how to buy put and call ratios. Here is one thing that we will do for you just because we happen to like you. All right. One of the things that we're talking about is the opening bell. This is a monthly option. It's a $95 put. Now, on that opening bell, when I showed the gap, the reason why the put side makes money off of the gap, as it does, is for one reason. And I'm going to make it very clear on how to be an expert market maker with these gaps. Yes, I said that. Now, let me just tell you something, pal. When they did that gap, here's that gap on Netflix. When they did that gap, that contract was at $5.95. And you had to buy that gap because it took the premium from $7.60 down to $5.95. And the put option, which is a $219.95 put, was at its lowest price. They took the premium out on that gap. And guess what? Guess what? That's how you make money as a market maker, knowing how to buy calls or puts on opening bell gaps. And it's just that freaking simple. It's so simple that you can't figure it out. Making $2 off of the bottom, and that was that gap. And now it's going to be time to buy the call options. And I'm going to show you in this case right here, right now, I'm going to go to the $90 call. And I'm going to tell you right now, on that $90 call, $556.95. On that opening bell gap, on Netflix, when you popped it on the opening bell gap, the contracts opened, or they made a high of $6.95. 255 contracts are traded. That's a 550s coming back down. We're putting the bottom in, and how do I buy the 190 call? And we just did the $95 puts, and we're market makers in the option pit. We control our prints, and not only that, you got to know when to come out of both sides, and or if you want to leave both sides, that can be done. Opening bell gap, call hit 695. It dropped to 550, and that's this big move off of the bottom right now. Gary, go grab it while you can. Here it is right here. Here's that reversal next to the red bar, and we're using call and puts. I've got a $90 call, and I have a $95 put to expire February monthly options expiration.